Hello, welcome to my channel today. This is a King's Tutor. The first time of joining us, ensure you like, comment, share, and subscribe to this channel. Okay. Now today we want to see the Waec 2023 question on accounting. Okay. I want to see the Waec 2023 question on accounting. So we're going to solve every aspect of it. Okay. So ensure you have subscribed so you will not miss the series. Okay. Now this question is a question 9 question, the practical question that is given. So the question said, on 1st June 2021, Euroco PLC issued 300,000 ordinary shares of $10 at par payable as follows: $6 on application, $3 on allotment, $1 on first and final call. 450,000 applications were received with application monies. The directors decided to 1. Reject 50,000 applications and return the monies received. 2. Issue the shares to the remaining applicants on the basis of 3 shares for every 4 shares applied. 3. Credit the excess application money to allotment. And they say all the calls were made and the money received accordingly. You are required to prepare the following ledger account: A. A share application account. B. Allotment account. C. First and final call account. D. Bank account. And E. Ordinary share capital account. Okay. Now the number 9 question is on issue of shares, and we have done various videos on issue of shares. I will indulge you to check in my description or check up here. I'll drop question on issue of shares. Actually, we're on issue of shares series, okay, or we're on issue of shares series. So watch the question first. So before we prepare this, we'll have our solution. So we're going to prepare an adjustment that's important for us to do. Adjustments that will help us. Okay. So the name of the owner is Iroko PLC adjustments. Okay, so they said they issued 300,000 ordinary share at 10 naira on these payments by installment, but 450,000 applicants were received with application money. Okay, so we're going to get application money that was paid and received. So it is $6 that is paid on application. So it will not be here. Application equals 450,000 times $6 when you paid an application. Okay, so it will give us now this is 2,700,000. Okay, because 450,000 times this will give us 2,700,000. So the next one will be now they said the director decided to reject 50,000 application and return the money received. So we're going to get the worth of amount that was received, the excess application. Okay, let's say reject 50,000. So the next one, the next one too is reject and refund. Let's get the amount that was rejected and refunded because we are going to post it. Okay, so 50,000. It is still on the application amount, so it will be 50,000 times the $6. So it will give us $300,000. Okay, so that is that. And the next one, they issue the shares to the remaining applicants on the basis of 3 shares for every 4. That's on pro rata basis. 3 shares for every 4 applied. Okay, so the third is the application on allotment. Okay, the application that was what allotted. Now, if 50,000 application, if 50,000 was refunded. Now remember, they said they issued 300,000 shares. Okay, this is their issued share capital, 300,000. Okay, so that is what will be what allotted. So the third one will not be application on allotment. Application allotment. Okay, So the issue share is 300,000 times $6. Okay, so it will give us 1,800,000. So this is the 3 for every 4 shares. Okay, 3 for every 4 shares. So it means anybody that has 4 shares, they give the person 3. Okay, which is what this 300,000 times $6. Okay, because they refunded 50. So what is remaining is 400,000. So they allotted that on pro rata basis. Okay, so that's for application. Then the fourth is on allotment money. Allotment money. Okay, allotment. Now they will allot on the shares that is actually issued, with this 200,000, and allotment amount that we paid is from what, $3. Look at it, so 300,000. So it will now be 300,000 times $3. So this will give us 900,000. Okay, so now they said credit the excess application money to allotment. So I'm going to credit the excess application money to what? To allotment. Okay, so that is what we call the set off. So the fourth will now be excess money on application set off against allotment. Excess money on application set off against allotment. Okay. Now, if you remember, their issued share is 300,000, but they got application of 450 and they refunded 50, so it meant 400. So the excess application there is what, 100,000. So they said in this credit the excess application money to allotment. So 100,000 is excess on application is $6. That is 6. So we now have $600,000. Okay. Now the next one will be on our final call. So we have first and final call. Okay. Remember, our issued share is 200,000 times $1. So it will give us $300,000. Okay. Now to now get the actual allotment as the total allotment. Total allotment. It will now be this allotment money, which is 900,000, minus 600,000, which is what, the excess application money set off against allotment. So what we now have is what, 300,000. So we'll have 300,000. So those are the adjustment that is needed. Okay, so we have done the notes provided and the amount that was paid instrumentally. So let's now make the postings. Okay, so let's now make the postings. So they said first one, prepare the what? The share application account. So we'll have here the share application account. Okay, now if you remember, we treated the introduction of the issue of shares. We said when they apply, they are going to pay. So they'll pay the bank. So they are paying the bank the totality of the amount. Remember, they said 450,000 people applied. We have done it here, 450,000 times the application amount money. It gives us 27. So they are paying to the company's bank. So it will be credited here as bank 2,700,000. This thing. Okay. So that is the application. Okay. So let's prepare their everything at once so that it will be easier. So that we'll post accordingly their entries and their corresponding entries. So I have this allotment account. That's for B. And C is the first and final call. First and final call account. Then D, we have the bank account. Okay. Then E, we have the ordinary share capital account. Okay. So now the first one we said they paid the share application paid 2,700,000. So it is received by a bank account. So it will be here on what? Application 2,700,000. Okay. So that is that. Now when they receive that, they receive excess, so they have to refund. That's what they say, rejects 50,000 application and return. So we did a refund. Okay, so the bank refunded 50,000, which is shares, which is what 200,000 naira. Okay, so it will be credited here because the bank is not giving out the money back. Refund 200,000. So it is coming back to the application as what? Refund 300,000. Okay, so that is the refund. So the next one, they said they issue the shares to the remaining applicants on this. So these shares were issued to the applicants on pro rata basis, 3 for every 4. Okay, which is what? 1.8 million. Okay, so the next one is the excess application money to set up against allotment. I said credit the excess application money to allotment. Okay, so excess application money is what? 600,000. So it said credit it, that's the setup. So we'll come here on allotment application 600,000. Okay, corresponding entry come here. So allotment 600,000. Okay, so that's on that. So the next one, I said issue the shares to the remaining applicant on the basis of 3 shares for every 4 shares applied. So that is application on allotment. Okay, so they allotted the shares now. So allotment of shares, it will not be on application. That's ordinary share capital will allot the shares that they paid for. On the application 1,800,000. So it will come here as ordinary share capital 1,800,000. Okay, so the next one will now be the allotment money that was paid. Okay, let's do the first and final call that was paid 300,000. So the first and final call. So it was paid to the bank 300,000. The bank will receive it. First and final 300,000. Okay, now the next one, our allotment. Now the third allotment, the actual allotment money that was paid now will now be 300,000. So was paid to the bank 300,000. Okay, and the bank received it. Allotment 300,000. So after they paid for the first and final call, so they have to allot shares for the first and final call. Okay, so the allotment of shares will be first and final 300,000. So it comes to the first and final call. The corresponding entry as ordinary share 300,000. Okay, we now have to close it. So if this gives us 2,700,000, this will also give us 2,700,000. Okay, so the allotment, this will give us 900,000. So it will be closed with ordinary share as 900,000. So half 900,000 here. Okay. Now the corresponding entry will come in our allotment 900,000. So this one is balanced. Then we have for the bank. Okay. For the bank, if we add this, it's 2.7 million, 300,000, that's 3 million. This will give us 3,300,000. 3,300,000 minus the refund of 20,000. So our balance carried down is 3 million. So it will give us 3,300,000. So the balance brought down will be 3 million. Okay, so the ordinary share capital will now be 1/8 plus 300,000 will give us 2,100,000 plus 900,000 will give us 3 million. So we'll now have a balance carried down as 3 million. So this is 3 million. So this is balance brought down as 3 million for ordinary share capital. So if you check this, the issued share is 300,000 at $10 payable at par. So if you multiply it, then this also give us 3 million as what they receive, and they also issue a nice share of 3 million worth. Okay, so that is the number 9th question. So we are going to see the other part. Ensure you like, comment, share, and subscribe to this channel. Okay, now let's see the other one. Let's see number 8. Thank you very much.